Welcome to Business Avenue, a portal for relevant tidbits for your career in business. My name is Edmond Jomna, a chartered accountant by profession and a consultant with DW Consult. So today we are going to talk about how you are going to make or derive optimum benefit from your purchases, or how to determine that you are getting an asset. So a business exists mainly to generate profits. So anything that does not align with such objectives must be done away with. It becomes a liability. Okay. So any activity or any purchase that you want to make, or any decision that you want to make in terms of purchasing an item, and here there are two types of purchases that you can make. There are revenue expenditures, which are the day-to-day expenses that you make towards the operational activities of the business, and we have a capital expenditure. These are purchases of fixed assets that helps in the generation of revenue in the long term. So what is an asset? An asset is any economic resource that you own or control that has the benefit of bringing in economic benefits. Let's look at the elements one after the other. Economic resource is any item of value. So it can be tangible, whether a building, a vehicle, set of furniture, television set, what have you. It can also be intangible. It can be softwares, it can be investment portfolios, it can be copyrights or patents. Okay. Second criteria is owning the asset, meaning you have fully paid for it and it's legally yours, or controlling it. So by control, we mean that you have the right to direct the usage of the asset without any interruption, and you stand to gain in full or in larger parts the benefits associated with the usage of the asset. The economic benefits which should flow into the business can be in two parts. Now, increase in benefits, like for example, increase in sales, increase in finances, giving you a higher competitive advantage over your rivals, or an increase in the market share than you used to have before. The other aspect of economic benefits is a reduction in expenses. So let's look at this case study. You run a business and you have a portion of your business that delivers the goods to your clients. Okay. So normally you resort to a delivery company, or you hire a van or a motor vehicle for that purpose. There are certain expenses that you incur. Okay. So when you decide to bring that delivery service in-house, you decide to purchase the van for yourself or a motor vehicle. Now, you should be able to calculate or estimate every expenditure related to that strategy. The cost of the vehicle that you are purchasing, every associated expenses. So you have to hire a rider or a driver for that purpose. You have to buy fuel, insurance cost, maintenance cost. All of that, you have to estimate it over the period that you intend to use the vehicle for, or the vehicle will serve you for. Then you break them down into periods, shorter periods, say a month. Okay. Then you compare it to the existing expenses or the expenses where you didn't own the item. When the strategy or the new decision leads to a lower expenses, then it is an asset and it's something that you should go in for. Another example too can be that you have enough money on your hands and you want to invest in a portfolio or invest in a building. So the item that you're going to invest in, is it going to bring you benefit? Does it have the market, or does it have the potential of getting customers that you benefit from it? If it isn't, then the money that you're going to put in it, even if you're not going to incur any expenses, your money is going to be reducing with the passage of time. That is what we call time value of money. Okay, so you need to invest in assets and not liability. Invest in purchases, in items, especially the capital expenses, that will bring you inflow of economic benefit, increase your sales or reduce your expenses. Any other thing is a liability which you must do away with. So again, whenever you are engaging in any expenses, find out whether there are other best options. So you want to buy an asset or a van for delivery. If the calculation leads to a higher expenses than usual, ask yourself, is there a better way of doing that and achieving optimal benefit, like leasing an asset for a company or renting it out? You don't necessarily have to buy the item because you can afford it. Businesses don't buy because they can afford. They buy because it can push them in their purposes of generating profits. Okay. So folks, this is where we'll bring our lecture to an end. Okay. Again, if you have any feedback, just drop them in the comment section below and we'll gladly address them as it comes through. Also, subscribe to our channel if it has become beneficial to you. Share with your friends to come aboard and learn the tenets of growing your business or maintaining your growth and achieving success. So we'll come to you again by way of Business Avenue. Take care of yourself and stay blessed. Adios.